The crypto market is absolutely surging right now. Bitcoin has touched $105,000, Ethereum just completed its major Pectra upgrade, and the total market cap is sitting at a staggering $3.33 trillion. Meanwhile, memecoins are pumping, regulations are evolving, and institutional money continues to pour in at unprecedented rates. Let's break down everything that's happening in this remarkable crypto spring and what it means for the months ahead. Bitcoin and the ETF Revolution have been the headline story of May. After years of regulatory battles and false starts, spot Bitcoin ETFs have now accumulated over $40 billion in lifetime net inflows, a truly historic milestone that few predicted would happen this quickly. BlackRock's iBIT fund has been particularly dominant, recording an impressive 19-day unbroken streak of inflows, including another $356 million just yesterday. This sustained institutional demand has pushed Bitcoin briefly above $105,000 this week, approaching its all-time high territory. What's particularly interesting is how this rally differs from previous cycles. Instead of being driven primarily by retail speculation, we're seeing methodical, steady buying from traditional finance giants who are allocating portions of their massive portfolios to Bitcoin as a legitimate asset class. The broader market has responded positively as well, with total crypto market capitalization reaching $3.33 trillion. That's still below the peak of the last bull market, but represents a remarkable recovery from the depths of the bear market just 18 months ago. And where Bitcoin leads, memecoins often follow. The original trio of Doge, SHIB, and PP have all posted near double-digit percentage gains after Bitcoin's move, though they've since pulled back slightly as traders locked in profits. This pattern of capital flowing from Bitcoin into progressively riskier assets is characteristic of bull market behavior and suggests growing risk appetite among investors. On the technology front, Ethereum has finally delivered on its long-anticipated Pectra hard fork, which successfully executed on May 7th. While not as dramatic as previous upgrades like the merge, Pectra represents important groundwork for Ethereum's future. The upgrade streamlines validator user experience and lays the foundation for Verkle trees, a technical improvement that will eventually reduce the chain's storage requirements and improve scalability. For everyday users, you won't notice immediate changes, but these infrastructure improvements set the stage for more substantial performance gains in the coming years. It's another sign that Ethereum's development roadmap continues to progress despite the challenges of coordinating a decentralized ecosystem. Meanwhile, Solana is gearing up for its own performance leap. Jump Crypto's Firedancer validator client and Solana Mobile's Seeker handset are both scheduled for release later this year. Firedancer represents a complete reimplementation of Solana's validator software, built from the ground up to maximize transaction throughput, potentially taking Solana's already impressive performance to new heights. The Seeker handset, following on from the Saga phone, aims to bring crypto capabilities directly to consumers, creating new on-ramps for mainstream adoption. The regulatory landscape continues to evolve, with mixed signals coming from different jurisdictions. In the United States, a flagship Senate bill to establish federal stablecoin rules suffered a setback on May 8th, failing a cloture vote after 9 Democrats withdrew their support. The opposition cited concerns about money laundering and potential conflicts of interest linked to former President Trump. This political deadlock highlights the continuing challenge of establishing clear regulatory frameworks in the United States. However, it wasn't all negative news for stablecoins. Parallel commentary has argued that stablecoins deserve to be treated as money under U.S. law, which would unlock their everyday utility. Additionally, the SEC's Corporation Finance Division has signaled that certain one-to-one backed covered stablecoins are not securities, potentially reducing compliance uncertainty for issuers. The European Union, meanwhile, continues its more structured approach. With the markets in crypto assets MACA regulation now in force, EU authorities have begun publishing the technical standards that will implement this uniform crypto asset regime. This methodical, predictable regulatory approach has earned praise from industry participants who appreciate the clarity, even if they don't always agree with every provision. Adoption trends also show promising signs, particularly in emerging markets. A Binance research survey of 10,000 investors found that an astounding 95% of Latin American crypto users plan to increase their holdings in 2025. This follows a 116% jump in regional adoption last year, highlighting how crypto continues to find particular relevance in regions with less stable traditional financial systems. Analysts have also noted a growing pool of sidelined capital, institutional money that's waiting for clearer regulation before entering the market. This suggests that the current inflows might represent just the beginning of a larger wave of institutional adoption once regulatory clarity improves. Legal observers have highlighted an uptick in Web3-related litigation and policy drafting across U.S. agencies, indicating that the regulatory landscape, while still developing, is becoming more defined. This increased attention from regulators, while sometimes challenging in the short term, generally signals the growing legitimacy and importance of the crypto ecosystem. Looking ahead, there are several key developments worth watching. First, whether U.S. lawmakers can salvage a bipartisan compromise on stablecoins before the August recess. Second, Ethereum's post-Pectra roadmap, particularly the implementation of Berkeley trees and stateless light clients, which will further enhance the network's efficiency. Third, the performance benchmarks once Firedancer hits Solana's mainnet, potentially setting new standards for blockchain throughput. And finally, the continuation of Memecoin rotation and its potential spillover effects into larger cap alternative cryptocurrencies. All of these trends point to a maturing crypto ecosystem that's gradually integrating with traditional finance while maintaining its innovative edge. The combination of institutional adoption, technological advancement, and regulatory development, though uneven, suggests that crypto's foundations are becoming more solid, even as prices experience their characteristic volatility. What do you think about these developments? Are you more excited about the price action, the technological upgrades, or the signs of mainstream adoption? Let me know in the comments below. Crypto's news cycle is indeed spinning faster than ever, but that's exactly what makes this space so fascinating to follow.